Hi everyone, it's Grant Abbott speaking, and welcome to this short and sharp session. I wanted to give you a really good idea of our LightYear Docs loan suite, and really when it comes down to it, it's more than you think. In fact, I look at some, it's embarrassing actually. I'm going to show you today a little bit of an annuity, but we've got a whole lot of documents that are sitting in our pre-production workshop before it goes up on the site. I must admit I found about 10 or 15 of them, which I've gone through and reviewed and haven't put up. Our advanced healthcare directives for Victoria, New South Wales and Western Australia will be up very shortly. We've also got a short film for Queensland, which you would not use if you are looking at advanced healthcare directive in Queensland, as you really need to have a long form. You need to have special attorneys for health and personal matters. We've also got a long form of the enduring power of attorney from Victoria coming in. Thank you very much for Gordon Black sending that to us. And again, so that'll be up and running very shortly. I've got next week, I'm going to show you the change in trustee positions where with one document, and it's a bit unheard of, I haven't shown anyone yet. But with one document, I can change appointors, I can change the leading members, I can change trustees, I can change beneficiaries, principals, founders, the whole box and dice. And so I can add new ones, I can remove old ones. So to me, it's probably the most complex one that I've done, but it's certainly, we'll call it Trump. So it'll be a sensational session. So I think loans are essentially a part of our life. I mean, even as a kid, you know, your parents lend you money, so on and so forth. But we've all got loans or lookalikes. If we have a look at fintech such as Afterpay, and I use Zip myself, they're pretty good little. They're really good little. I suppose I call them apps or finance apps, where you can pay money off over 4 steps, or Zip is really good. So you get an interest-free period, then you have to pay so much per month. It's certainly a lot better than the typical credit card. Mind you, you don't get points on that, but still certainly saves you in terms of interest. But both of those, and we can start to see there's, they're all starting to pop up and also starting to take overseas that, they're taking over from the credit card, and certainly the personal loan offerings are virtually out the window these days. And credit card rates still at astronomical interest rates. It just doesn't make sense. We've got P2p Lending, which seemed to be the big one years ago, but really seems to have dropped off quite a bit. I think the Afterpay and Zip have probably taken it on. But they're a fantastic offering, 5 to 7%. Obviously, for investors coming in, it was a great opportunity. And look, we talk about cryptocurrencies, etc., but cryptocurrency is probably not all it's cracked up to be. I like the concept, but as soon as you've got a concept where you've got some monetary value that crosses border lines, can be used for tax evasion, money laundering, anything. Obviously, it's always going to have a bit of a murky area, and governments aren't going to like to do that. They'll do their own digital currency. But in the end, I mean, we're virtually in Australia now. I can't remember the last time I had cash in my pocket. We are a cashless society virtually now. And so with credit cards, with EFTPOS cards, with, just our, moving money around through our phones, effectively, we are in that cashless society. So loans are an important feature for us. I'm not sure whether many of you have really get into doing loan agreements. I'd love to hear your feedback for your clients. But look, it's an important point. I mean, the whole idea or the concept of LightYear Docs is to provide you guys with a very sophisticated legal office in your office without having the pain of lawyers. Now, at any point in time, if you need full sign-off on any transaction or idea, you've got Abbott-Family. All we do is we only work for you. We don't take outside clients. So we're only there for you, and we have discounted fees. So for those of you who are using our the Moat, you'll see next week we go through our 5-step process. But to get an SMSF will, a will with testamentary trusts, and an EPOA and even advanced healthcare directive signed off for a single person at $495, when you can be charging $3,500 for that package. Gee, that's a great opportunity. Go to anywhere else and you'll find that, well, first off, the lawyers will want to draft it all and you get nothing, which has been a bit of a hampering. And that's been a bugbear of mine, is that as accountants and planners, you know your clients, you know them well, you've got a good book of clients, you build up rapport over many years. And then there's no incentive to send them to the lawyers because you don't make any money out of them. If it's a bad feedback, then basically you're pretty well stuffed. So what we're building is that system, that ecosphere for you to really go out and if you have a look here, be really at the forefront, be those leaders in, and you can see them, the smart guys like the Tim Munros out there. You know, you're right out there in front offering all these tools for accountants who are the trusted advisors and planners as well, you know, to go out, build better systems for their clients, but make money at the same time, which has always been lost in the past, because at the end of the day, compliance is great, but effectively it can be taken away at some point in time. And as you can see, as big data comes down, the tax office is already doing more than 4 million tax returns a year and offering them for free. Now, that's not going to happen with every small business, but it's going to get a lot more cutthroat. So, and if your book, if you lose 10% of your clients next year as a consequence of COVID, or things are going to get tough, the first thing they're going to look at is your fees. They're going to have a look at sharpening their pencils, and they're going to want more competitive compliance fees. Whereas if you start to offer value-added things such as loan agreements, promissory notes, motor vehicle leases, you'll offer the protector, all of these things really add to your book of tricks. And the thing is, you've got all the financial information anyway to set all this sort of stuff up. So it's important that you can offer all of this sort of stuff in-house, which I think is a great opportunity. If we have a look, I've got a question thing here, which is great. So from Sally Rourke, good to hear you, Sally. We're starting to do a few loans from SMSFs to unrelated property trust assisted with property developments, mostly as a consequence of additional auditor requirements. And that's great, Sally, because again, these are the sort of things where, for example, Alan Hall and also Tim and all of us should be at this innovator level, because I can give you all the documents, but then how you apply those documents to what circumstances effectively is up to you. So you're going to be the innovators. And there's no doubt that I know with Sally and also Tim that you're both innovators. You're enthusiasts, you're innovators, early adopters, as everyone on this platform at the moment, because you're visionaries. You can see what we're seeking to do. Not only are we providing you with the best legal office, but also providing you with a whole system of succession, asset protection, estate planning, SMSF, loans, things that you're just not going to find anywhere. I know, for example, my old firm now, Infinity, we're picking up quite a few people from there. They're all very disenchanted because they don't get any support from Class, and Class is actually starting to reduce the number of documents that I used to build up on that system. So we're the reverse. We're building more and more. Plus, we've got great support. You can call me at any time or jump on our support at any time and we'll address something. And if there's an issue about any document, we'll go in and fix it. I mean, I don't see anything as a criticism. I see it as an opportunity to make things better. So, and then we've got the pragmatists at all. So probably in about 3 or 4 years, we're going to start to see a pick up in that SPEPA, the Succession Asset Protection Estate Planning Advisors Association, much the same as it was when, and Sal knows, we started up the SMSF Professionals Association years ago. And then after 3 or 4 years, it was then taken over as now the SMSF Association. But look, to be brutally honest, we give, like, for example, this is going to have CPE on it for you guys. And I saw yesterday, look, we've got our 4-hour session next week. I know a lot of you guys are either licensees or subscribers, so there's no cost for that 4 hours CPE. And the CPD for FASIGA is, I think it's 3 hours client care and 1 hour of professionalism and ethics. So they're the really hard ones to get. And for anyone who's a POYG or a changed GPS user, it's only $49. So that works out to be about, what, $10 per CPE. And then you have to think of the old school associations, like the SMSF Association this year. I think there was something like 15 hours and the cost was around about $3,000 plus accommodation plus airfares. So it's a very expensive way of getting CPE. And I saw the SMSF advisor has got a 2-day workshop. It's really actually 2 half days on, I forget what it was, strategies or whatever, which is coming up. They've finally worked it out. They're getting their sponsors to do talks, and obviously we'll fund the session, because when you do it on a Zoom or whatever, it doesn't cost anything. So they're doing it all for free. So it now puts the associations who have been running, huge surpluses because of their conferences, they're now in a very difficult position. But that's how we used to do. So I know it's an amazing position, and I know, John, exactly what you're talking about. Okay, so what loan and loan type documents are available? I'm going to come in and have a look at a couple of them for you. We've got our all-purposes loan agreement, which is really the guts of our system. I love it, does everything. The good thing about ours is, because we can automate, we can actually add multiple documents in there. So for our loan agreement, you can see you can put in a mortgage deed and a personal guarantee if you want. And of course, for security, it's not a bad idea to do so. So these are just the little extra things that you can do. So rather than having to go to a loan agreement, then a mortgage deed, and then a personal guarantee, it's all wrapped up in one. And really, for $99, it's virtually next to nothing. But we run a lean and mean ship. We've got a great system. The system we're using at the moment is good, but it's an old system, but it's in, over 1 million legal firms around the world. That's what I'm saying, is you guys are getting the best legal system with the best legal precedent around the world, but there are better ones out. So we're currently doing a tender out there. So that will be, hopefully, we're looking at 1st of April launch date, and a few of you will jump on beta well and truly before that. The good thing about that is, for our subscribers and licensees, you'll be able to download them in Word or as a PDF, so either one. So that's coming down the track. I don't want to preempt things, but essentially, that's why we went through our capital subscription. Div 7A loan agreements for companies and also potentially trusts. So what we've got there, obviously, for any account, you know what a Div 7A loan agreement, I don't have to go in there, but that's essentially there. SMSF loan agreement. So what I did is I started off with this loan agreement, and then I tailor-made the SMSF loan agreement, which Sally was saying you use. Now, the importance about that is it's not, unless you actually understand what you're doing, it's not just a loan agreement for SMSFs, because I could have just left it up there. So what it is it's the super fund acting as a lender. Again, it'll get security, whether mortgage or personal guarantees. But importantly, from that perspective, is it can go to unrelated parties, and then it's an unlimited amount. But importantly, we need to make sure that that both the lender and the borrower sign in that agreement that they're aware that they're subject to the SIS Act, and they won't do anything that will breach the SIS Act. And I think that's absolutely crucial. With a related trust or the company, what we've got there is obviously we're going to make sure that it stays under 5% of the fund's assets. And I'll show you one that we did with the motor vehicle lease, which is a which is a good one because the value of the car generally drops down. So it depends on what happens with the fund. But essentially what we've got also built in there, if there's monies that are lent that breach the SIS Act, then they're to be sequestered, and that transaction is to be treated as void ab initio, which just simply means it wasn't valid right from the start. So we can sort of give a back out clause. These are sort of tools and resources that I put into the system. A promissory note, which is a promise to pay in the future. Think of it like a personal check, except the promise to fund is actually coming out of your funds rather than a check, which is a promise to pay from a bank account. So they're exactly the same things, but you can use them for contributions. Look, there's a number of reasons why you'd use them. One's for contributions. There's also times, for example, in order to get the death benefits advantages. For example, if we've got the 17% for non-dependents, tax-free for dependents, to pass those out, if you try to do an in specie transfer of an asset out to a beneficiary, a dependent beneficiary, then that voids it's just a strange quirk of the tax rules, that voids the actual concessional tax rates. So it has to be paid out in cash. So the commissioner, and there's been a whole line of cases, states that a promissory note is akin to cash. Have a look at his contributions ruling, which I think 2009/1. When you have a look at that, essentially that promissory note could be paid out either as a pension. So again, you can pay out promissory notes as a pension if you've got large, lumpy assets that you can't sell down quickly. The promissory note could only be around for a short period of time. Otherwise, you don't want to see the super fund being in a borrowing position. Otherwise, you're going to have to go down the limited recourse borrowing arrangement. But getting back to the death, what we do is we pay out a promissory note as a contribution, and then we transfer that promissory note back to buy the asset. So that's the way we cover the in specie, buy the asset. And effectively, that then cancels the promissory note. Likewise, if we have a look at certain things like the transfer, we might have seen the small business exemption where we've got business real property, want to transfer it into super and claim the small business exemption. Effectively, that actually has to be done in cash. There's just a small quirk in the CGT small business exemption rules, particularly the $500,000 retirement exemption, that when we transfer it over, it has to be in cash. So again, it's got to be cash, and then you put the property in a little bit later on from that. So the promissory note's great. For those of you not using our account-based pension for your clients, I would sincerely, and I think there's probably a lot of stuff, Tim, that I need to work on with you, that whether we put in change GPS or we do it our perspective, but there's a lot of campaigns we've got to be starting to running every quarter. For example, all existing account-based pensions, from my perspective, depending on what situation they're in, should probably be rolled back and started again. Because if you have a look at our account-based pension, it's got 3 or 4 reversionaries. In fact, we're just building one out now so that it can go from mum to dad, and then it can go to multiple grandchildren if they happen to be financially dependent, so that it splits to a number of pension beneficiaries. So again, we're getting down that sophistication, and we'll look at this next week. The reversionary pension is a very, very tight and sophisticated estate planning vehicle. And even in New South Wales, the concept of a notional estate may apply to the payment of an amount of money to a dependent, a spouse dependent or a child dependent from a super fund, so we can get clawed back into the estate, as we saw in Kelly's case. Not a great fan of it because I think it's unconstitutional. But notwithstanding that, if we've got an auto reversionary pension, it gets rid of all that because there is no notional estate. It's just simply a passing of a pension. So it should always be for SMSF's pensions first. Then after that is a really quick cleanup. If this is New South Wales, quick cleanup, and then I'd be putting the benefit into an SMSF Death Benefits Trust, which is a testamentary trust created by the trustee of an SMSF. So again, an SMSF Death Benefits Trust is a testamentary trust under Section 104 AG4 of the Income Tax Act, prepared by the trustee of the SMSF, not the executor. And as a consequence of that, minors get to use adult rates. So I'd be using that sort of stuff. But again, to go down that account-based pension, quite apart from the fact we've got all those reversionary elements on it, the other side of the equation that we've got is also that we've also got built into that two key criteria is that you'll have a minimum pension amount, which is obviously determined on the person's age for the year and their account balance. Anything over and above that is to be treated as a commutation. So it's like a forward. If you take anything more than this, it's a commutation payment, which, for example, if my minimum pension balance is $15,000, I take a 50, then $35,000 will be treated as a commutation. As a consequence of that, my T-bar will be reduced by $35,000. So what it means is I've got an extra $35,000. So there's a debit to the T-bar. So now means I've got $35,000 credit I can put into that T-bar. So if I've got accumulation monies on the other side, it's a great way of putting monies over into my pension account. Now, I can't just top up the new pension account because it's got to be a brand new pension. So I may well store up some of these and then roll them back and start again. The other side of the equation is also we've built in there's a little button you'll see in the account-based pension that effectively, if you press that button, that in essence, what it means is there's a deemed promissory note. So that if you are going down the track and your client hasn't made the minimum pension, there's deemed promissory note, which is evinced. So for example, again, going back to the $15,000 minimum pension that I just talked about, if I've only made out $10,000, then at year end, there's a $5,000 notional promissory note, which has been issued from the super fund to the beneficiary. Again, we've got to be careful about the duration of that, because if it gets too long, then there's going to be a law. So promissory notes, great. I love them. Really flexible vehicles. They're my go-to at all times. Whenever cash has to go and I haven't got cash, I love the old promissory. The motor vehicle lease agreement, which is a finance rental agreement. I'm going to show you what that looks like in a second. Annuity, which is a term certain investment agreement. So for example, Sally might give me $100,000 and over a 5-year period, I pay her $21,000 or $22,000 per annum. And it can be monthly, quarterly, or annually. So it has an inscribed interest rate or interest rate which has been built in. And effectively, it's for a term certain. So it's not a lifetime annuity. We can only do term certain annuities. And then essentially what will happen is from if we have a look at it, and there's quite a lot of information on it when you have a look in our product kit. But essentially what we've got there is just look at the calculator. That'll show you out of each of the payments what percentage is interest and what percentage is principal. So it's deductible to the issuer of the annuity, the interest payments, and it's assessable on the other side. So again, just something that I find, it's quite useful for people who need a set income coming out each and every year, every moment, rather than draw down on their capital per se. Although obviously they've use their capital to pay for the annuity. A gift, obviously we know a gift, if we have a look at it, it's really crucial with all family situations. I've underlined all there, that we determine that when we do give, there's three things we should do. So when we deal with our children or our parents or whatever, there's three things it can be. It can either be a loan, which is important, a gift, or an allowance. Now, an allowance is good because an allowance is a continuous payment over a period of time. If we can show that it improves a person's necessities of life, then effectively it should be treated as it makes that person a dependent, which is why we've got on our system a family allowance agreement, which is a perfect tool to ensure that not only all members of the family are potentially dependents, which can then slot them in for those auto reversionary pensions for those ones who are dependent under tax purposes. Obviously, if they're children over 25, you'd have to take it as a lump sum, or as we said before, into Smsf Death Benefits Trust. But otherwise, we would just simply take it as an ongoing income stream. The other one is gift, and then there's the loan, obviously. So particularly in family law, you'll see in Pelly and Nolan, and there's hundreds of cases here. In Pelly and Nolan, parents gave an amount to a child to renovate their house, and that was treated as a loan. And however, then the parents gave the children monies here and there, and that was treated as a gift. So the loan amount was obviously had to be paid back and wasn't part of matrimonial property. So I would have thought this is a crucial part. And again, it's that discussion point from the accountant to get so involved with it. See, accountants generally won't get involved, or planners won't get involved in that side of the equation around their clients. But where you do have a family situation and we're moving down this family situation, that it's important to say, look, we've got a document for that. Mortgage deed, absolutely vital as part of asset protection, secures other creditors who are unsecured. Obviously, if you've got a first mortgage, such as a bank, they've got preference, and then you're the second one in. But if you don't register it, then there's no security. It's still there. It's just you're going to have to prove that you've got that mortgage anyway. Personal guarantee, obviously, I always like them because, you're not a bank like go and get a bank loan. You've got personal guarantees up the wazoo anyway. So it's not a bad little tool there. We've got those quite independently, but they're all built into our loan agreement packs anyway. And of course, you've got the protector, which is a gift and loan back with security to secure equity the client has in any asset that's owned by them. So you can use the protector for existing companies. If you've got a trading company, it's got goodwill, etc., you want to protect, throw it up into a family protection trust, trading trust, and also assets between spouses. So let's go out and have I'll just end the show and we'll go out and have a look at a couple of our documents here. So what have I got up here? Okay, so we've got the deed of gift. I think most of you are pretty well aware of the deeds of gift. When we come down to, so let me have a look at deed of promissory note. So I'll just show you what that looks like. I'm just going to go through quite a bit. So the deed of promissory note, these are ones I've pre-prepared for you. There's plenty of samples. If you need a sample, just contact support@lightyeardocs.com.au and we're more than happy to come in to go through. Phil Scandizo, is there a possibility when you complete a document as execution checklist that we can follow to ensure the documents are effective? We definitely have got one there from if you have a look at all our wills, there's a letter from Abbott-Family on an execution checklist. But that's a really great idea, Phil. I will take that on board and leave that with me as a great idea there for you. Remember, at any point in time, you can save answers, you can get a document preview. If you want to get the answer summary and you want to actually have a look at doing your own data capture, all you have to do is just down here, you get the answer summary. This goes through everything that's on each page of the interview, which you can print if you want and take you back. Okay, so I've got the promissor. The promissor here is John Smith. You'll see if you're using the protector, you might actually have a joint asset being a property and some cars between husband and wife or spouses. So you're going to end up with joint promissors, which I could do here if I wanted, but I've just got one promissor being John Smith. The promissee is obviously an SMSF. So this is a nice little contributions promissory. So I'm doing a contribution into my superannuation fund. So when will it be executed? So let's just go, this is a nice one, short of cash. So I'm going to do it on the 29th of July, 29th of June. Now, importantly, from that perspective, if it's for a superannuation fund, the Commissioner's changed the guidelines in terms of contributions. We need to make it on demand. It used to have a few weeks, now just make it on demand is crucial to get through from the auditor's perspective, which you can see I've put that in there anyway. Promise details, $3,000, which is pretty useless contribution. So let's just make it $25,000. Is there a compensation payment? No, well, because it's a short term. But if this was, for example, to go for a 10-year period, so let's say it's not the Smith Fund, it was just a company or trust, go for a 10-year period as we see in the Protector, then we might want to put a compensation payment in there of say $1,000 or whatever, just to show, I come from a background that I'm a great believer in contract law, that in order to have a promise, you need to have consideration. And the consideration there is obviously that compensation payment. And you can put late charges in if you want. Now, this is it's good for related parties here that I've done that. I would actually go no here. But then what we do is I'd say, look, from that perspective, look, just be careful. If we can use that instead of a true loan agreement from a party. So use a promissory note, which again is going to be treated as a Division 16E annuity. So get the deed of promissory note, up it goes. You'll have your own logo on it, and you can see there, obviously I didn't, when you get this sort of gobbledygook there, you can see one, I haven't put a logo on there, and also didn't complete the ACN in there as well. So it just means all I have to do is go back and relaunch the document, and then we're off and running. So it's promissory note on demand. So that's great for cash. And again, it just means I need to put the ACN in there. So let's go back to the here. So we've done a promissory note. Wanted to show you down here. I think I should have a loan agreement up here somewhere. So commercial property lease, investment strategies, blah, blah, blah. In fact, I'll just do a loan agreement anyway. I think I've got Div 7A there somewhere. So you got your Div 7A loan agreement, which, I'll just have a quick look over for you. Don't want to spend, I want to make sure you get out of here in time. Main thing is just to know it's all there. Obviously, the lender is going to be your bucket company there. The borrower is an individual. I've got it to a family trust here. But obviously we could do an individual or mum and dad as well. Agreement details, we've got the date there, and I'm going to have to update the one now for 2021 as well. The commencement interest rate, it's all locked in there, so I'm sure the rate is already going to be built in there. So you've got Div 7A, there's still supposed to be a few changes coming through, but they never got through. If we have a look here, where's that motor vehicle lease? I've got one all-purposes loan agreement. Oh, here we go. Here's an all-purposes loan agreement. It's a nice little juicy one. So this is our fundamental one. It's probably my favourite out of all. When we have a look there, so we've got the document set up. Here I've got is Abbott-Family, so I've gone for the logo. Make sure you have your logos. So we've got the lender being an individual. We could have an SMSF here, but again, I prefer the specific SMSF loan because that loan document really factors in a lot of the superannuation laws as well, and also tries to sequester if you make a mistake. As I said, it goes void ab initio. But the individual company or trust, borrower, individual company or trust, obviously not to an SMSF because otherwise you'd be using an LRBA. We've got our agreement details in there. It's for term, interest rates, principal loan amounts, repayments a month, principal and interest. We'll do that. In fact, I'll just do interest only. Does the loan have a personal guarantee? Yes. Is it the guarantor the same as the borrower? Yes. And then if I wanted to, I can put in the mortgage as well, but I'm going to go no. So as you can see, just that plain loan agreement really has got three sizable documents there. For $99, that's pretty great as far as I'm concerned. So we've got the loan agreement. I've got a couple of other ones there. Where's my last one? As you can see, there's quite a lot there. Leading member discretionary trust, family protection trust. Okay, advanced care, we don't want that one. I'm looking for the motor vehicle. Oh, here we go, equipment and motor vehicle lease. Okay, so this was from a superannuation fund. Again, because it's going to a related party, we've got to make sure that it's for no longer than, it's got to be no more than 5%. So document setup. So I found that's, again, lessor. I've got the super fund, but again, we can use this from an individual. If you wanted to use associate leases for FBT purposes, company, trust, SMSF. Lessee is we've got to a trust. Again, we can't go straight to the individual. Otherwise, it's a breach of Section 65, which is financing. So we do to the trust or the company, but we can't go beyond the 5% rule. So if we have a look at the property itself, if it's worth $50,000, then we've got to make sure that we've got at least over $1 million in the fund. So some of the fields that we've got there, date of the lease agreement, I can just put in there, it's going to be tomorrow. Commencement date of the lease. Oh, there you go, that stuff's set up, doesn't it? So commencement date of the lease is going to be tomorrow as well. Whoops, sorry, it's not. Tomorrow, document preparation costs, if any. So this is straight out, again, it's typical legal costs. PPSR registration fee. We will have a session on that coming down the track around PPSR. We've got the detailed of the property. New South Wales, specify where it's going to be fixed. Is it a movable? I'm going to say no in this case. So again, you can use it for anything, for sheds, whatever. So it's a really good equipment lease. Rent detail, period payment per month, the residual capital value, total rent amount, dates, etc. And then that will pop up the lease agreement. So I'll show you that, and I'm going to show you a couple more, and then we'll call it a day. So hey, everyone's doing well. It's Christmas soon. I wonder if we'll be able to travel. Went up to Port Douglas last week. Just needed a week away after Dad passed away, and then don't know if you heard that Mum had breast cancer and had a breast off last week. Then I went in surgery this week, so it's been a pretty busy time for me, but still loving all this. So equipment and motor vehicle finance lease. Go through all of that sort of stuff, have a look through their conditions. It's a really good, strong, it's a super strong motor vehicle lease. I don't know if I told you we're doing shareholders agreements coming up very shortly as well. So lessee and also the lessor as well. So have a look through that. That shows you how easy it takes to build. The other one, I'll just go into our site now and have a look at our document categories. You'll find most of our stuff is the business and commercial agreements. So you've got the annuity contract, which I won't go into, equipment and motor vehicle lease, buy, sell, a little bit different, deed of loan forgiveness. So we might have got a loan, but now we want to forgive that loan at some point in time down the track. So that's there for you as well. Your Div 7A, the all purposes one that I went through then previously. And then you've got your SMSF loan agreement as well, mortgage deed and personal guarantee. So they're basically all here. You'll find though that we've also got down here SMSF borrowing. So we've got our related party one. So there's that meets the Commissioner's guidelines, PCG 2016/5. So that actually has a whole series of documents in it, including holding trusts and whatever. So I'll put that in there. So the LRBA holding trust pack, that's for bank lending. So you want to use that. We've just had a couple of adjustments recently made by Gadens, who love to make adjustments along the way. So that's just been through Gadens. Non-bank lending, essentially that would be, for example, it's a third party that's doing the lending to the superannuation fund. But if you're doing related party, you must use those two ones as well. And then you've got your deed of promissory note, which is basically sitting down there. And of course, for estate planning, which we're going to look at next week, we've got a whole range of stuff there. It just keeps on getting bigger and bigger. Our family allowance agreement, when I talked about it before, remember, get that clients on it and you'll get there. Next week, we're going to be looking at the moat in quite a significant amount of detail. I need to pump that up as well. So that's where we're at. A couple of things that are coming up from our perspective is this, obviously, the protector. For those of you who haven't seen it, you work out your net equity on all your clients. So they've got a home, car, and investments. They're all in their personal name. And it's 1.7. We gift it over to a family protection trust. And then only family beneficiaries, lineage or bloodline, can be those beneficiaries. Have a family protection company, then it's a loan back with security. But we'll go into that a little bit further next week with Tim. So a couple of things is on our site, you're going, okay, John, so the gift agreement. Okay, so let me have a look at the gift agreement. John wanted to see that. And he picked up a couple of typos. Look, that'd be great if you could have a look. I'll send it to you anyway. John, if you could pick it up, that'd be great. So if I go back to my business and commercial, in fact, what I'll do, I think I've got one there just to have a look. My vault. Abbott test. A gift. Okay, so the deed of gift. So deed of gift, I prefer deed of gift rather than loan forgiveness for UPEs, but that's just my preference. So you can see this is the process we're going to be going through eventually with all our system, our new system, that when you open it up, there'll be a lot of information in there. We might even put execution details as well. So you've got a video tutorial, sample document, deed of gift webinar, a client data capture. So you can pull all that stuff down. The document setup, same thing. Gifter, we've got the individual there. The giftee is a trust. So this is, for example, a UPE. We've got all the directors, and the gift is the date, and we've got unpaid present entitlement, all unpaid present entitlements on books to family, the Smith Family Trust to date. So that would then give us the gift document. Again, if we have a look at in the protector, there's a package next week. I'll be going through that package. And if you want to have a look at it then, we'll do that. But again, if you want to get a sample of the promissory note, just go through for typos, it'd be great. Not saying that we haven't done it, but I know, sometimes there's just little things there. So the gift of property is UPE, Smith Trust. So this is between the son and the trustee of the superannuation fund. My preference to a loan forgiveness anyway. Let's get back. As I said before, what we've got there is we've got our next week. It's going to be a great session. If you haven't got time for it, still book in because it will be recorded. You'll find it here. You can see up here the October Strategy Day. For licensees, it's free. We've got Tim Munro, who's going to be doing a great session on how he brings the moat and also the protector and all that to clients. Tony Animalis is going to do a great flow chart on how to use Abbott-Family, but more importantly, one which is really important to me, obviously, with my father, is how to administer an estate, because it's really important upon all of you as accountants that if something goes, when that passing happens, that you're there to look after the client and administer the estate and the Smsf estate. So Tony will take you through the steps on that one, and of course yours truly as well. So make sure you get in. As I said, most of you will be for free, or if you basically do $49.49 compared to $149. So we're going to be looking at a lot of stuff, and we'll also be discussing final details recently established Succession Asset Protection Estate Planning Advisors Association and how you can get involved in a chapter. So without further ado, I'll do that, and then next Thursday we'll be looking at the all-encompassing change of positions in a discretionary trust, which will be great. 6 a.m. Julie, it's good to see you up nice and early. Thank you very much. But it's good. I know, Julie, I've seen you before. I've had a few red wines with you. You're always up at 6 a.m. Anyway, next week, we've got quite a full week, but it's going to be so exciting. Anyway, it's Grant Abbott signing off.